Tax. It's probably one of your biggest bugbears in business. Might be one of the things that keep you up at night. Tax, like any other business expense, whilst we don't want to pay it, is required to be paid, of course, but needs to be budgeted for, needs to be managed, needs to be forecast. So you know what your commitments are. Even if you don't know to, the last dollar, estimating those based on, your previous history, you can have a pretty good idea of what your tax commitments are going to be. So what about the novel idea of actually preparing a tax cash flow statement to actually know when your payments are going to be due and ballpark what likely amounts they are. Now, GST, you can get a general feel for that based on, your business turnover, and, as long as it's relatively steady, there's not going to be major variations. Your pay-as-you-go instalments, are similar, although can jump up and down if you've had a significant increase or decrease in profit from one year to the next. Your pay-as-you-go withholding for your employees, again, if there's not a great movement in employees on a month-to-month basis, that can be pretty standard as well. So there's no reason why you can't do a 12-month tax cash flow forecast, so you know what you're going to be up for and when. Because I find that when talking to business owners, this is probably one of the biggest problems. Sometimes they're struggling getting payments in from their customers on a timely basis, but they obviously have to make their commitments in terms of their staff, materials they purchase, obviously all the outgoings, rent, electricity, phone, car, etc. And the one thing that gets left behind is the tax, and that's what creates problems, because the tax office are being a little bit more aggressive, fair to say, and they're not being as tolerant as they once were. Having said that, if you do accumulate a tax debt, there's always a payment plan option. And getting on the front foot early to do that is the best advice I could probably give. Bearing in mind, whenever you do get into a payment plan with the ATO, that means all your future lodgements must be made on time and paid in full. So you can't just continue to add future tax debt to an existing ATO payment arrangement. Now, if you're finding yourself that you can't continue to make those future payments, then there's something horribly wrong with your business. And when I say horribly wrong, I mean you can't afford to make ATO payments, which means that you're making payments elsewhere that you probably shouldn't be, because you can't afford them, because those funds are not yours. The GST is not yours, the pay-as-you-go withholdings is not yours, and the pay-as-you-go instalments are not yours. So the reality is, if you can't make those payments ongoing, there's a problem. And so we need to get back to the root cause of that problem and understand what that is and start working on that. So, might be a novel idea, but a tax payment cash flow forecast is probably a good idea, and that can work in well with your normal budget and cash flow forecasts that you prepare. Getting all this right is critical, keeps you on track, makes you sleep better at night. Hope you found this useful. Thanks for listening. Look forward to speaking with you soon. Bye for now.